Let's take a look at money matters now. The JSE was firmer in the early trade, rather, while its global peers were mixed as investors await developments in the Russia-Ukraine conflict. Local focus will be on Finance Minister Enoch Godongwana's budget maiden speech. Chantal Marx, head of equity research at FNB Wealth and Investments, joins us now to talk through the latest market developments. Chantal, always a pleasure. I see a smile on your face. How are the markets faring at midday trade as we anticipate the budget speech?
Well, the JSE isn't trading particularly strongly today. That's definitely not the reason for my smile. I think my smile is more the pressure that is coming through on SENS. Lots of companies reporting results and, of course, budget this afternoon, which has all our analysts very, very busy. It is good news for the Rand, though. The Rand is quite strong today, despite a risk-off mood globally. Unfortunately, though, that is having a negative impact on some of the big dual-listed companies. So if you look at the companies dragging down the JSE today, some of the miners, Anglo-American, Amplats, BHP, and then Naspers and Prosus also under pressure today.
Locally, all eyes are on the budget speech scheduled for 2 p.m. this afternoon. Will the minister deliver an investor-friendly budget?
Well, we certainly hope so, and he does have the room to deliver an investor-friendly budget, but that room also comes with a lot of responsibility and, of course, a lot of government departments and areas of government calling for what has been a commodity price windfall for the South African fiscus to be applied to different areas of that budget and different areas of government. Our hope is that you do see a combination of it funding the 350 Rand social distress grant. Of course, that has a positive impact on economic growth just from a consumption perspective, but there are a lot of questions around whether or not it's sustainable. And then we're also hoping that some of that windfall gets applied to reducing debt and resulting in government having to issue less debt going forward. So we're hoping that we'll be in a better fiscal position as a result of it, and that the extra money is not applied to areas like SOE bailouts, for example.
Only time will tell. In company news, shares of construction group WBHO lost close to 25% this morning. What's happening there?
So the company's board has actually decided to no longer fund its Australian operations. They were looking to sell the business. It's called ProBuild. They focus on big, large-scale civil projects in Australia. They were looking to sell it. It got blocked by the Australian regulator, and it seems as if they've run out of options with that one. So they're actually just going to scale down operations and stop funding that loss-making business. The construction industry in Australia is extremely competitive, and it's very difficult to operate there at the moment because of the level or the varying levels of restrictions that are being applied in that economy currently, a lot stricter than what we have seen in South Africa. They're finding projects difficult to come by, and then it's super competitive, so the margins at which they are winning contracts are extremely thin, resulting in losses when just one little thing goes wrong. So Wilson Bailey Homes deciding to exit that business. They have already invested about 2 billion Rands in that business, and I think that is probably why you've seen the share price come under quite a bit of pressure.
Let's take a look at news from Investec. So they plan to double clients in 4 years. Ambitious much or doable?
I think it's both ambitious and doable. Investec doesn't have a very large client base. They are exceptionally good operators, both in the banking, wealth management, and asset management space, or when they were in asset management space. So it is achievable. They will have to really aggressively go after market share, which I think that they can do. It is very ambitious, and banking is a bit of a sticky business. So, yeah, time will tell, but I don't think it's completely impossible.
MultiChoice is planning to limit DSTV video streaming to one device at a time from the 22nd of March, seeing a lot of reaction on social media. Will this not drive customers away?
Well, the thinking, I think, behind it from the company's perspective is that they will gain customers. Because what you're seeing is that someone has a premium subscription, let's say parents living in Nelspruit, and then their kids over in Joburg and Pretoria are actually streaming off of DSTV catch-up. They're not taking out DSTV subscriptions, but they do want to still watch sport. They do still want that local content and all the other content that's available on the DSTV platform that's not necessarily available elsewhere. So I think their thinking is that more people will actually get on board. I think that it will alienate some of their existing clients. I think it's especially tricky when you look at young families and perhaps you want to stream something for yourself as an adult and you want to stream something for your child, and now you are limited to only being able to stream one thing at a time.
Chantal Marx is head of equity research at FNB Wealth and Investments, taking us through the market moves at this hour. Thank you, Chantal.